Hey folks, Vic here with your weekly trade video for the week ending Friday, January the 10th of 2020. We have just completed our first full week of trading for 2020, and I just want to show you a few of these, and overall it was a profitable week for most of our traders. I can't say that for everyone, and the reason for that lies mostly in the way that individual traders manage their trades. Obviously our more experienced traders are a little bit better at it. And before I go any further, please be sure to listen to this video right to the end, because we have a smashing offer for you that won't cost you a dime, and I'll go over that later on. I'll tell you how you can have free access to our first Coach's Corner webinar of the year, where Darko laid out in detail our entire game plan and trading approach for 2020. So I hope that'll be valuable for you. Now, I know I sound like a broken record, but in this game, if you don't have a solid trade management game plan in place, you will fail. I mean, it's just no other way to put it. And the reason you need to manage a trade is simply because we never know what's going to happen next. Okay? And by the way, when I talk about managing your trade, it doesn't mean that you need to be, at your charts all the time, staring at your computer. Use alerts for when price gets to certain levels that give you a message on your cell phone or on your computer, and then you can take some action, like remove risk or at least adjust stops. We're all busy, right? And managing trades with alerts rather than staring at your charts all the time is the whole idea of taking on more of a swing trading or set and forget approach, more relaxing, less stress. And it's going to be the primary focus of our Coach's Corner service this coming year. Staring at your charts once you're in a trade is one of the worst things that you can do. It only causes you to start overthinking and tinkering with your orders and second guessing yourself and all that kind of stuff. It's very, very psychologically damaging. Also, when you learn to read the language of price, what price is telling you, you can very effectively mitigate your risk. Okay, you should not be taking a full loss all the time. Sometimes you can't help it, right? But a lot of times you can. And I'll show you an example of that on a trade that we had this week on one of our trades. And not taking a full loss is a huge factor in your overall profitability. Now, the big story this week was the conflict in the Middle East involving Iran and the U.S. military bases in Iraq. We had no idea that this was going to happen, right? And that, folks, is why we always need to use stops and plan out our trades. This is a prime example of what I mean when I say we never know what's going to happen next, and why we're always harping on trade management. So let's have a look at a few examples of actual trades that we had this week. In front of you is the US yen pair. This is keep in mind, this is a safe haven currency when things go wrong. And if you look at this, you see this level, this 108.55. Remember that number, 108.55 is very, very price sensitive level all the way along here. And the prior week, it closed below it, like very solidly below it. And for this was so that sets up the possibility of a swing trade. And for swing trades, we use our 4-hour charts. And here it was. Here was that big drop down here below it. Comes back up. Here's 108.55. I've got it marked on my 4-hour chart here. This little, look at how it dropped away from this small rally really hard. So that's a significant level to sell it there with a stop over here. And this is just pure price action reading, like a breakout sell level. And so this is where Darko notified our members in his pre-market analysis video way in advance, right? To look to sell right here with a stop over here. This big fat red candle is when the missiles started being fired off from Iran, and again we didn't know about that, okay, and we also didn't know that it was going to go flying back up here, like when President Trump started talking, saying that the U.S. would not retaliate. All we did was we used known levels of reaction, and isn't it amazing how those levels hold despite the news? But the point is this: you didn't have to be at your computer to either get into this or to get out of it. I mean, as price came down, we knew about this level down here. This wasn't after the fact. It was way ahead of time. And we had members take profit down here, right? If you were sleeping, you could have had a take profit order in already ahead of time, right? If you're at your computer, no problem. Keep in mind, this was an event-driven drop, and these are notorious for bouncing back up like this. But it could have been handled very easily in advance. No way that you take a loss on this, and in fact should have gotten some profit out of this, which most of our members did. I'm going to show you another one here. This trade is a really good example of how you can mitigate your loss on a trade. And this was another, let's go to the weekly chart here. Yeah, you see this level here, right along, all this along here. Look at the resistance and then a bit of support in here, and it hits it again. And if you go down, this was a day trading opportunity. And the reason it was is because it was an advanced candle action setup right here. This blue bold candle was actually an ACAT trade setup that Darko showed everybody in the PMA video. And so let's go down to the 1 hour chart, which is our entry time frame for day trades. On the 1 hour chart, here's that same level right across. I've got it at 7,500. It's that same approximate level. Now let me just get the little pen out here and see if I can draw this in without making too much of a mess. Price went up, it went down, and then it came back up into here. This right here, this blue candle closed higher than here. We like to see that. This becomes our entry. This is exactly what Darko pointed out. Let me try that. What he pointed out in his PMA video. Now, this is what I mean when I talk about reading the language of the market, or Darko talks about this all the time. When the price was filled in here, which was at 74.90, what happened? Well, first of all, it came up a little bit, and then look at this candle, this red candle here. That is bad news, folks. This is reading the language of the market. What did it do? It actually went below this. This is where our stop was, below here. It never got stopped out. But look what it did after that. It rallied back up and gave you a chance to get out of this trade. Why would you want to get out? Because this is not, taking out this low here is not what we want to see. Okay, that's showing you that it's probably going to go down again. That's the probability. And what happened? It went down a lot. So you had lots of chance to get out of here for break even. Some members took a 3 pip loss. I think somebody took a 9 pip loss. Whatever. Listen, the original stop loss was 23 pips. So like the loss that was taken is less than half of what you'd normally be looking at taking. It wasn't even a 0.25% loss, right? So, and it's very, very easy to make up a 0.25%, much easier than if you took a full loss. Gigantic difference in your account, okay? So loss mitigation is like, and most trades that go against you, very, very often you can mitigate them. So when we show a loss, hey, that's generally not a full loss, okay? All of this, right, just by learning to read the language of the market. What is price telling you? One more to show you here. One's in the Aussie US dollar pair. I'll just speed this up a little bit. This was on a daily chart, pretty obvious level here, 68.50. So price hits it. We didn't have any kind of a pattern setup as far as an ACAT setup, but what we had, if you go to our entry time frame, is we had a more price action. This was a swing break in here where price came down, up, down, and swung back up here. And this was our entry right here. And it was actually at 68, call it 68.60 with a lower low stop loss. And I think it needed about an 18 pip risk, if I recall. Came up and into this level here, right? This is like almost a day later. This is not a trade that you want to lose money on. Again, look, this is just chop, 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 chop. This should be going up. That's what our expectation is. Not a certainty, just an expectation. That's the probability. And it comes down finally, and you get stopped out. And this is a break-even trade at worst. So all of this stuff makes a big, big difference in your trading. If price is not doing what it's supposed to be doing, and you read the language of the market, you can make a huge difference in your account. So I hope you can see how important it is to manage a trade properly. Now, in our first Coach's Corner live webinar for 2020, which was just this past Monday, January 6th, we invited all of our Coach's Corner starter members to attend. Okay, you can become a CC starter member for free, and there's a link in the text below this video or in the email that you received where you can join. And as a CC starter member, you get access to one of Darko's pre-market analysis videos each week. And actually yesterday, January the 9th, Darko did a really nice educational PMA for all of our traders, including the CC starter members. So if you're not yet a CC starter member, that is a great video to start you off with. Anyway, in the CC webinar on Monday, we showed everyone, including the starter members, of course, our complete game plan and trading approach for 2020. And we also gave everyone a super deal on joining the Coach's Corner for a deeply discounted rate. That deal is going to be good until this Sunday, January the 12th, to anyone who's a CC starter member or even a regular Coach's Corner member who wants to take advantage of it. And as I say, it's free to become a CC starter member, so there's kind of like no downside to it. Also, if you become a CC starter member, we'll also send you a link to the complete recording of that webinar from last Monday, so you'll have full access to it, where we revealed our entire game plan for 2020 and how we'll be trading. You'll also receive all the details on the discounted pricing options. So yeah, there you go. We hope you take advantage of this offer. And you know what? If this video was helpful, we'd sure appreciate it if you hit the like button and subscribe to our channel. Don't forget to click that little bell when you subscribe, and then you'll be notified whenever I put out a new video. Thank you so much, everybody, to all of you. And, we'd love to have you join our community. And, of course, I'll be in touch next week with another weekly trade video. Take care. Hope you all have a great weekend.